take a look at the Brent prices, and they have eased in the market today at 108 a barrel as downbeat U.S. economic data outweighs the supply disruptions in Libya and Angola. You have seen a decline coming in for the NYMEX crude oil prices as well, which is off the $100 per barrel mark, which it had been trading at for the last 3 sessions now. The spot gold prices in the meanwhile have hit a fresh 3-month high and look set to post its biggest weekly gain since the month of October as more weak US data raised fears about economic growth, and that really has led the metals appeal as a safe haven. On your screens, more than 1% of gain and 13.20 almost on your screens. It's a good $16 of a jump up coming in for the gold prices there. Let's get on board then. Vijay Bamwani, who's CEO of BSPL India, to talk about the gold prices. Also joining us on the show is Peter McGuire, Chief Market Strategist. MXT Global joins us for more on commodities. Vijay, to you first, what's your sense really coming in for the gold prices? The run-up has been quite intense for this week itself.
Absolutely, Manisha. And I do admit to being pleasantly surprised. Since we've broken past the 29,150 levels, very comfortably trading above that threshold, the probability of 29,600 is now elevated. And that is the first resistance level I see in the absolute near term for gold. And ditto for silver. I think 46,400 could be the next resistance levels to be seen on silver here.
Nearly 2% of gains coming in for the gold and silver prices in this month alone, and the week, of course, has been positive as well. Peter, what's your sense? The gold prices have held higher even after 2 rounds of US Fed tapering. Do you see an underlying strength continuing, and would you come out with contrarian call for a buying on this one?
Gold has performed incredibly well over that period, and I think that won't surprise many pundits that probably realise that there's more upside yet. It could snap 1,300 in the foreseeable future. I'd say sometime this month, which isn't a really brave call, but I think it's onward and upward. Probably hold something between say $1,250 to $1,400 range. We need to see more idea as far as those unemployment numbers and the turnaround of the US to really give us some faith that we're going to see gold edge lower, but at the present time I think there's more upside yet.
Peter, what is your sense between gold and silver? Where do you see a better performance coming in?
Well, I've seen silver markets sit pretty flat for the last, 2 to 3 months. It really has done nothing since November. It's been range bound, a little bit of whipsaw action, but it's pretty tight as far as that range. Wonderful market that was great to short over the previous 8 to 10 months. Very wonderful trade. Trades like that don't happen too often, but when they do, they're just, showstoppers. Gold market has been very easy to trade over the last, 6 to 7 weeks, and I think that'll continue. Though, let's just wait and see what happens from a demand picture as far as silver's concerned, and we might just see a little bit more movement to the upside.
Peter, let's talk also about the base metal space, and that has done a bit well as well. The support really seems to be coming in from the fact that you have seen decline in US dollar. There also is sense about the Chinese buying into the metals.
I think you'll probably see an uptick across that sector. And China, it's again great buying opportunities. Fill the warehouses with relatively cheap compared to what you were paying years ago. Consumption, I think you're just going to see a continuous, market strength there for quite a while ahead. And, the world, its growing population, more consumption, more usage, and China's well positioned to take the charge on that.
Fair point, Peter. So that's the view coming in from Peter McGuire, that between gold and silver prices have more possibility of going up, and we have seen some support coming in for base metals as well. But Vijay, the same question to you. What's your sense now for the metal space? Because we have seen consistent gains on this one.
Manisha, at this point in time, I would attribute it to short covering, because the data emanating from China is not as bad as was feared. And there is trader activity, especially short covering rather than too much by way of gung-ho buying. Wherever there had been a build-up of short positions, there you're seeing some area of activity. For example, you're seeing aluminium, which had been shorted, is now trading comfortably above the 106 threshold. If it was to stay above 106 for the next 1 or 2 trading sessions, the probability of 108 also opens up. Similarly, for lead, I think if it stays above the 131, 131.5 levels, I think it could scale up to 134. Zinc, if it was to stay above 126 levels, can go up to 129. So this is a short covering based rally here.
Vijay, also a word on the energy space, and there seems to be some profit taking coming in right now. Would you say it was a run up too much too soon, and we are looking at some consolidation now before we take a direction?
And this view of yours is particularly relevant for crude oil, because crude at 62, 60 odd levels, which we talked about 3 sessions ago, was overpriced. And at this point in time, the February month futures trading at 61.90 odd levels are precariously poised. If you do see a close below 61.75 levels today, I think the bulls are likely to have a tough time. They might just want to unwind their long positions and drive prices lower to 61.50, 61.60 kind of levels. So high-risk traders seeking intraday momentum should be searching out for short selling opportunities on crude. Natural gas, on the other hand, is witnessing short covering, and the possibility of 335 to 338 in the next 1 or 2 trading sessions cannot be ruled out. But I would not really want to buy out on natural gas in very large quantity, because as it approaches 345 odd levels, I do see resistance coming up at higher levels.
Particularly 3% up today and nearly 9% up for this week is how natural gas prices have traded. The sugar lobby, ISMA, has welcomed the government's decision to provide export subsidies for raw sugar. Speaking to ET Now, the ISMA chairman has said that the tough decision is late by a couple of months. The additional subsidy will improve cash flows for the sugar mills, though.
He's certainly very satisfied, even though it has come almost 2 months late, and there's just about 1.5 months of sugarcane crushing left. Whole process, about 4 million tons that the government has allowed and the incentive that they have announced, we've certainly got a lot of cash flows, and we'll be able to pay to the farmers on time.
But does it seem like a kind of a half-hearted effort, because it's only for the next 2 months and then they'll take a review again?
This 2 months is basically that incentive of 3,333 per ton is linked to the dollar-rupee exchange rate. So in the first week and every first week of April and every 2 months after that, they will tweak this 3,333.
Sugar prices globally are under pressure. Now, if India releases 4 million tons, is that going to drag prices down again?
Yeah, I mean, there is a glut in the international market, and if another 4 million tons moves into the international market in the next about 15, 16 months, it is obviously going to put pressure in the international market. The prices are going to be under pressure.
What is your assessment of the impact on the domestic prices, where the prices head in and how are they performing?
See, if you look at the domestic sugar prices, in the last about 12 to 14 months, it has come down by 6 to 8 rupees across the country per kilo. And it's lying below our cost of production, and we've been losing money very fast. Because of very high sugarcane price, we have become uncompetitive in the international market.
Well, ISMA obviously giving a thumbs up to that proposal that has come in from the government. Export subsidy has been improved. The cash flow, of course, can be supportive as well. Vijay, we have seen good gain in the prices for last 3 sessions now. The prices are up nearly 3% for this week. You, of course, have been talking about higher prices.
Manisha, I think the upthrust is still not done yet, because as we approach the end of April or beginning of May, I would still hold out my level of 29.75 to 3,000 as a potential target area for sugar. The mid and far month futures still remain a buy on dips. Any decline of 2% is an invitation to go out and buy mid and far month futures on the financial futures markets.
Vijay, also, what is your sense now coming in for the mentha oil prices? They haven't just gone below 800 rupees, but we have seen further pressure coming in for them today.
Manisha, mentha oil has been performing as we've been talking about on this show. 766 was a level I talked about. Even that is breached now. So the probability of sub 740 levels cannot be ruled out. And any rally to the 788, 790 area will invite fresh shots. And I think momentum-based players might want to seek out short selling opportunities on rallies of 15 to 20 rupees. I think lower prices are here, and as the weather gets warmer, the mentha oil futures are likely to decline even further from here.
Vijay, what's your sense coming in for wheat prices? Because I remember you saying that this is a level that we can start buying on, and prices definitely have gained up by 1% from those levels.
Manisha, wheat is likely to remain range bound. Even though it's rallied, I would see a fairly limited upside potential, not exceeding 1 to 1.5% from the present juncture. So if I do see prices approaching these 1688 to 1694 band, I think one can safely start shorting the mid and far month futures, because before the elections, I do expect one more decline in wheat prices. And the decline, of course, may not be very steep, but sub 1650 levels is a very high probability event.
Okay, mostly buy calls coming in for the agro space. It actually has done quite well as well in this week and in the markets today too.